everyone for welcoming me here. My name is Lindsey. I'm hosting today's presentation on market direction using volume and price. I want to go through and show you exactly how volume is key to doing those things. But first, I want to make sure that we understand that we are here for educational purposes only, that there is a great amount of risk in trading these markets, but I want to make sure that you understand I'm not a registered trading advisor, but I am an educator, and I can show you exactly how I trade, how we teach to trade at Hawkeye Traders. I want to go over an introduction to volume because a lot of people take volume for granted. They think that it's just out there, they don't think that there's any value to it, but I want to make sure that you understand that volume is important. And I want to show you why it is so important. I want to give you a lot of market examples and applications of using volume in today's market on the live edge of the market to help you to see, know, and understand that there is clear intent from the market makers, and the players behind the scenes to push the market in a specific direction. Without volume, it's virtually impossible to know that. So, and towards the end of today's presentation, I will make you a very special offer only to the attendees of today's webinar, and I'll make that to you very close to the end there. And we'll have plenty of time for questions and answers. I'm sure you're going to have some. All right, so traditional trading, you probably have seen lots of different statistics, but between 70 to 80% of traders today are failing. I heard a guy yesterday say that over 95% of traders were failing. Well, he must have a different pool of traders than I do, but that's true. There are a lot of people who are using traditional strategies and methods that just aren't working, that just are outdated, or they don't really understand or know how to use these types of methodologies. There's MACDs, the stochastics, Bollinger Bands, Elliott Waves. These are very popular and free available methods that people use all the time. A lot of people can use these things successfully. I'm not saying that they don't work, but I do say that 90% of traders out there are using these methods, and between 70 and 8% of them aren't doing very well at all. So I want you to understand that volume really is one of the most important indicators for you to use. Volume is really the only leading indicator. It's the only one that signals price movement before it occurs. It signals market intent. All other indicators are lagging by comparison because it's the only one that gives you a headshot or an upfront vision as to where the market makers want to go. Okay, so when you couple that with triple time frames, and I'll tell you a little bit more about what I refer to as triple time frames later on, then volume on triple time frames is the key. Okay, so me as a trader, I've been trading since the mid-'80s, but I really only started trading quite a bit in the late 1990s. I was a part-time trader, a full-time engineer. I made quite a bit of money, had enough to buy a house, all new cars, pay off all my debt. I was doing really well. In that time, it was difficult to take a trade and make a loss. You just could go out and basically buy anything, and it was going to make you money. However, I blew up several trading accounts after the crash of 2000. I was not disciplined. I started risking more. I was overconfident. I started doing things that were just not wise. I started following every Tom, Dick, and Harry out there, and I lost all confidence in myself because I was inconsistent in trading the markets. I really didn't have a blueprint for how to follow my own plan, or even have one for that matter. But I learned valuable lessons from my losses. You understand that losses is equivalent to experience, and experience is equivalent to success. The more experience you have, the more successful that you will be, and that is derived from your losses. So if you're not destined to learn from your failures, you are destined to repeat them. So make sure that you take notes and learn from your losses. And that's what I started to do. And then I was introduced to Hawkeye Traders. Like yourself, I attended a webinar. I went and found out a little bit more about the training and the suite of indicators they offered. And I found out about trading with volume and price and how important it was as a trader to understand the relationship between volume and price. And I learned all the secrets of volume, and I found what the missing link was for me in my own trading, and it was volume. Volume was the key. And so I want to make sure you understand the basics of that. So I'm going to go through a very good introduction to volume and understanding of volume right now. Standard VSA does not consider the open. VSA is a term that refers to volume spread analysis. Okay, volume spread analysis is a way of looking at the distribution of volume on any one specific price bar or over any given period of time. And it gives you a way to analyze that, where you determine the overall spread, the bimodal or modal distribution of that spread, the value area based upon the standard deviation, and so forth. And so it gives you a very good analysis of the amount of volume and where the volume occurred on those price bars or during that period of time. Well, standard volume spread does not take into account the opening price. You're only looking at the distribution over the range of that price bar and not looking at the open or the close. Hawkeye, however, considers this as paramount. It's very similar to an auction process where you've got the auctioneer standing up and saying, can I get this bid started off at $100? And nobody raises their paddles, and he says, can I start at 80? Can I get a bid at 60? Can I get a bid at 40? And then someone waves their paddle up, and we have the opening price. So someone starts the bid at $40, and we have a market. And so they start bidding, and we probably will see the price go from 40 to 45. Maybe it'll even end up at $50. So, and then it'll close down. So another scenario is that when the auctioneer stands up and says, can I get an offer at $100? We instantly get an offer, and a paddle goes up, and we start the bid at $100. And so we'll see that through the course of the bidding, auction price will probably go to about $110, $120. So it's very important what the opening price is relative to the market that you're trading. So the opening price sets the basis for the session. And so it's very important to understand that. So let's look at volume price analysis in a little more detail. I'm looking at the open, high, low, and close of the price bar. And I'm looking at the volume spread analysis during that. So we're looking at the distribution of volume as it occurs over the high and low of that price bar. So when you take into account where the price opened and where the price actually closed and where the bulk and the distribution of that volume occurred during that price bar, then it gives you a very clear understanding of the nature of buying and selling over that price. So because the price opened and closed lower, we see that there is a large distribution of volume where the point of control, the value area is all in the lower part of this price bar. We see the close down in the low part of the bar, and we see the bulk of volume is there. It's very clear to see that we would be looking at a selling pressure or aggressive selling coming into this bar. So we would paint that bar red. If, however, we saw a open and a large amount of volume distributed in the upper part of this price bar with a close at or greater than the open, then we would probably be painting this volume bar green. All right, we also have another color. It's called neutral or no demand. It paints the volume bar white. The volume bar white indicates that we have a very balanced and even distribution where the open is very similar to the close, or we see that the close and the open are in the middle portion of the bar, not towards the high or the low of that bar. You'll typically see these in dojis or scenarios where the open and close are very similar in price. And so that's what volume price analysis does. It takes into account not only the volume, but the opening price as well. Okay, so looking at volume and understanding what volume does, it's a culmination of over 20 years of research. We've taken a lot of the hard work and boiled it down to a very simple indicator that's a much more sophisticated way of trading, more like forensic analysis rather than technical analysis, because it enables you as a trader to see your trades more clearly. Okay, it gives you a different perspective of the charts. It enables you to see the structure of the market on how to place your trades, how to keep the profits that you make, and how to protect your positions, because volume really is the only leading indicator that you see. So looking at some specific examples, and I'll go into live examples here in just a minute. I just want you to see that during a typical session, this is the S&P 500 on the 5-minute chart during the market open. You can see that there's a large amount of volume that comes in at the beginning of the market. You can see a lot of this is selling pressure coming in. So you got some aggressive selling going, and you see very responsive price action to that. But when you see the first and the second bar, you see the close is less than the open, and in the lower third of the price bars. This third price bar, however, opens at the high, has a large tail, and then closes greater than 50%. And you can see that the color of that bar is colored white, indicating that there's really no demand. And we all know that the market cannot continue to go down when there's no demand. All right. So when there's no sellers stepping into this market, the price is not going to continue to go down. So this very large white bar is indicative of exhaustion and showing you as a trader that this market is not going to continue to go in this direction at this time. So we can then see that we go into an accumulation distribution mode where the volume becomes white, then red, then green, then white, then red, then white, then green. Okay, so we're going into an accumulation distribution phase where hands are being changed and people are jockeying for position in the market. We want to be able to see, based upon this opening range, where is the market going to go, and what are the telltale signs that you're going to see using volume that will help you to do that. Okay. One of the most important signs that you're going to be looking for is a price extension with opposing volume. Whenever you see volume opposing the direction of the trend, and you see a new high or a price extension into new highs, then this is a valiant attempt at sellers trying to trap retail traders into the top of the high of the market. And then they're going to pull back very rapidly with larger than normal volume and try to trap those buyers in this market, and with a large amount of selling, pull this market back down. And you can see, where are the buyers? Where are the buyers in this market? They've gone weak, and then the sellers came in and took control and became very aggressive. Then you can see at this point, very anemic buying, not a lot of selling going on. But when the selling started to come back in again, price became responsive. Responsive selling, anemic buying. Ultra low volume with an increase in volume, but very anemic. It's just simply not no aggressive buying coming in. But when you see the selling coming back in again, then you see responsive price action to the point of where we're going back into an accumulation distribution phase. And then we see all the telltale signs coming up at this point where we see responsive price action, building momentum in the volume. So now we're seeing a nice trend of build, just like we saw right here, a nice building trend of volume, and then very responsive price action coming from that. So it's very important to see that and to know that ahead of time, because we saw way back here that there was a clear intent to drive the market down. And we can see through this phase here that there was a clear buildup, that there was a lot of selling starting to go on, because the big boys are now starting to sell into this market because they're going to be driving this market down, and they're going to be doing it with passion. You can see right here, boom, the volume started increasing considerably, causing price to go down quite a bit. Okay, so that's a good example right there. But now I'm going to go into some live chart examples. So I'm going to switch back over, and I've got several different platforms that I've got set up that's going to show some examples of volume in these markets using the Hawkeye volume module. I'm only going to be using the volume module. We do have quite a few other tools that help us to see, enter, and trade these markets with great success. However, I'm going to just be showing you today what these markets are using just the volume tools. Looking at the gold market and looking at the overall market intake, looking at the open of the gold this morning, you can see that there are some clear indications that right at the top, when you see wide bars pushing up, and let me turn this wide bar indicator off. Right there, you can see that we have a selling pressure coming up into the open of the gold market, and an attempt to push volume up, and then a hook when you see a push up with buying volume followed by a very aggressive sell-off of selling volume, this is a hook pattern, which is very much like a isolated high or pivot. And this is a high probability reversal signal that you're looking for on price. And if you look at the candlesticks, you'll see the exact same thing. You can see that set up the session. This is like the opening of the gold session for this. And so when the equities market open came in, you could see quite a bit of selling pressure coming into the opening of that equities market right there at 9:30. So clearly we can see clear direction in the gold market coming up into this. Even as the market started to drop, you can see a lot of attempt trying to buy into this market that failed. And you can even see at this point a big attempt to open big price bar with a large amount of volume, but then that price only closed in the middle point of that price bar, and then it followed off with a continued sell-off until we see a new price extension with a opposing volume here that was much greater than the average volume. So you can see this is the turning of the ship, and this was the close of the directional trade, and you can clearly see that from the volume. The volume is showing you that it's trying to stop that and bring an end to this amount of bleeding. And you can see coming into the close of the market that the market is traded sideways. 2 o'clock, we've got FOMC. So these are all FOMC data items. So it's really going to be hard to determine what the market's intent is when you have large news announcements like this. And so anytime on FOMC days, you see this type of sideways, range-bound, choppy price action. So that's the cause. That's why we're looking at this. But prior to that, we can easily see what volume was doing leading us into this market. This is a 5-minute, a 15-minute, and a 30-minute gold index. If you look at a longer time frame market, here we're looking at Qualcomm on a daily, weekly, and monthly time setup. Again, volume is identifying weakness, and you can see this back in 2016 after the push up into the high range that an attempted buyout failed, and price failure got you into a stalled and dead market. And you can see every push going higher was met with greater than average selling pressure. Very, very easy to see on the price. So if you're just looking at volume alone, just that alone will help you to see the intent and where the market of that is going. What we're seeing right now is that we're starting to see some buying volume, much larger than an average buying volume coming into Qualcomm. And we can see on a daily basis right here that we've got much larger than average volume buying in to attractive $52 buying levels. All right, so with that in mind, we're looking for price at this point to at least get back into the $56, $58 range, and we're looking at that price continuing back up, but we need to see the triple time frame monthly volume start to give us a kick in the right direction. So we've got weekly and daily volume pushing us. Now we're going to be looking for that monthly to come back in line. And then if you're looking at Forex, a lot of people say there's no volume in Forex. Well, there is tick count, and with Hawkeye, we are able to do the exact same method of volume price analysis, looking at the volume, looking at the tick count available through each of the brokerages. We can do the exact same analysis to let you see and know when there is the same type of price move in the opposite direction. When you see price extension trying to trap sellers in, and then a rapid price, aggressive price movement following that, you can see the exact same structure way ahead of time that buyers are stepping in, accumulation, distribution. Now you can see a highly weighted buyers market coming in and a push into the market direction. So you can, it's not only during these other times, but you can see that all over the time. Here's that same hook pattern I was telling you about earlier. We got a big push down and followed by a big responsive buy up, and then off the mark goes. And you can see that time and time again in all the markets that when you see these types of patterns developing in the market, it's very, very easy to have much more confidence in your trade. Right? So when you're looking at a specific setup, and whichever market we can look back at again. I liked crude oil. Crude oil was a very nice market for me this morning. Let's see, where is that? The close. There's the open right there. And then this morning, okay. So you can see that there's a clear indication if you're trading these patterns and you have other indicators like MACD, okay, or if you're trading these with moving averages, then you can see that at specific points, when you see a hook pattern or when you see volume starting to come in and identify a specific direction, then when you get a crossover of your MACD or when your fast average crosses over your slow, then if volume is supporting the direction of the trade, then that gives you valid criteria for entry. Now, if you were just to trade at each of the volume bars, it's very difficult to say this is the buy point or a sell point. This is a sell point or a buy point. It's really difficult to just use volume by itself. It gives you really clear indications of the direction of the market and where you're going to be going. It's very easy to trade from that perspective, but it doesn't give you a definitive entry point. And so by using other tools like a MACD, a moving average, or these other tools that are lagging by nature, then if you have volume showing you that it's going in that direction, then it gives you a very clear indication of entry. Right there, right there. Boom. There's an entry point, strong bar, 3 bars of volume supporting you. You are in the trade. You couple that with triple time frames, then when you look at this specific trade entry, and then you see that on the second time frame that you've got selling volume, on the third time frame you've got selling volume, then that gives you a much higher probability that this trade will move in your favor. Move in your favor. Is there anyone here that uses the MetaTrader 4 platform? I can close that one down if we're not using that. We've got a lot of the Forex tools on MetaTrader 4, and I can go ahead and close this down if this is a distraction. Maybe we'll do that. And I can open it back up later if we need to. I also have NinjaTrader running, so I do have quite a bit of platforms running here. So I hope that's not distracting to anyone. But this is NinjaTrader, and I just want to have it as an example to show people that that the tool works on any of the platforms we support and for any of the markets that we're running in as well. We're trying to make that a little bit easier to see then. Right. So if you're looking at this as far as trading, if you're looking at it to trade, then we have other tools that we apply to help you to make that trade decision, and that's what you would want to apply and use. At Hawkeye, we have other tools that we use to help us to identify and use as trade entries and exit points. Okay. So specifically the longer term. Apple was one, I'm definitely following that. Pull that up for you real quick. Apple just had its earnings yesterday. We were trading the gap this morning and did quite well on that. You can see that it went down. I'll pull the actual chart up real quick to show you. Apple had a gap down. You could see from the volume there's no demand on this. As it gapped down because of the earnings disappoint, actually it was good earnings, but just I guess wasn't what they were expecting. The price gapped down, but you can look at the no demand volume. It's just not going to go down when there's no demand. So we were looking at this and all over this to the upside at this point because of the input of volume. High amount of no selling volume. And then when we got buying volume coming in greater than average, then we see very responsive buying. Okay. So here we are on a great setup where a 5-minute setup gave us a very nice entry point and some very good profits for that. Even for trading options, when we see very small and very little support for a downward move, then this makes for very aggressive options buying. If you're looking at weekly options, selling puts, or ideal situations for this, or buying calls in the direction of the trade is ideal for trading using these types of setups and scenarios. But again, volume is the key. And the tools that we use to help us to get into the trades, namely the trend, the stops, help us to see where we hold the trade, and it keeps us in the trade until the trade itself is done, and helps us to get back to, and of course profit points are right back to the gap fill. So you can see right there, price trade right back up to that and was done. So it just made for an easy trade breakout that we were looking at this morning. So anytime you're looking at volume, either shorter term or longer term, then you want to be able to trade using those volume signatures to apply that in your own personal trading. Okay. The Fatman for Forex, that's not the current topic of the discussion today. The Fatman is more of a specialized tool for isolating and selecting which Forex pairs to trade. But today we're focusing specifically on volume and volume price interaction. Okay, so I want you to be able to see that with volume, you can identify clearly market direction and intent and how to take and set up trades specifically. Well, it depends on how you use the word demand, RB, because I say there's no demand, whether it being buying or so, there's no demand being placed on buying or no demand being placed on selling. So if the word is confusing, then you're looking at supply and demand. I can understand that. So I'll try not to use that. I'll refer to that as an even distribution or neutral bar. I'll refer to that as a neutral bar. Yes, it's not on balance volume. We're looking at the overall distribution of each individual price bar. So it's almost like an order flow bar distribution or a market profile on every single price bar. So if you were to look at longer time frames, then this is a daily. This volume bar shows you like an analysis of market profile over the entire day's bar. And if you look intraday, then you're looking at the exact same analysis. But we're doing it easily, and we're doing everything in the background, and we're making it easy for you as a trader to look at the volume bar color to determine whether we have strong aggressive selling, strong aggressive buying, or neutral, which is an equal balanced buying and selling. You're always going to have buyers, you're always going to have sellers, but which ones are more aggressive, which ones are more dominant? This is what our volume tool shows you, and you want to be on the right side of the market. And volume really is the only one that kind of tells you that ahead of time, and shows the intent of the corrective action. When you see a whole series of either neutral or selling that is extremely low, then that tells you the market's not going to continue to go down on low volume. The market has to have large volume to go down. It has to. It can go up on low volume, it just is not going to go down. Robin wants to know, why doesn't volume just work on its own? Well, of course it works on its own. You can see it right here. It's just that if you see a red volume bar, and you see this red volume bar, and you see this red volume bar, which one are you going to buy on, or which one are you going to sell on? Okay, it's just the volume is going to change, and it can change bar to bar, and it does change bar to bar. And how you interpret that can be confusing based upon where price is. So if you have another tool, or if you have some other method that you're currently using, then if you add volume to that current method, it's going to help you to start learning how to trade using volume. That's why I mentioned that. If you just take everything off and you start over from scratch and just have volume, then you might be able to do pretty well, because if you still have to determine where a trend is. You still have to say, okay, here is a double top, a break of that double top gets me into the trade. That's great. If you have volume supporting it, then you've got exactly what you're looking for. Right? If you're looking at trend lines, if you're looking at a break of a trend, then you can see you've got a trend, you got volume breaking that trend. This is the place where I need to be looking at buying or retrace selling. Okay, so these are the tools that you need to be able to augment with volume in order to help you. At Hawkeye, we do have other tools. We specifically use tools like our trend, like our roadkill, that show us exact alignment of our multiple time frames at the exact same time to show us where the highest probability, lowest risk entry points on the trades are and how we trade those. It also gives us the ability to manage, but we're not talking about those tools today. We're talking specifically about volume. And the offer I'll be making to you guys later on for volume is to help you to get started trading with volume today, where I want you to be able to learn the aspects of volume with price so that you can start using it. You don't have to spend a lot of money on all the other indicators, just a little money to get started with volume and understanding this application of volume. So Chris wants to know if this will work for Forex. Absolutely, it will work for Forex. You can see here's some Forex tools looking at the dollar Japanese yen, where we are seeing this is the news that came out today. You can see there's a huge amount of an extension of buying volume on these price lows. Now we're starting to see a bunch of selling pushing that price back down, but right now it's still unclear overall. Right now we're seeing that there's a lot of selling coming in at this price, but buyers are starting to step back in with equal fervor. So there's a battle going on here, and we need to see this high broken to determine if there's enough buyers there or if this truly is going to push back down and start giving us a correction move. Okay, so the Australian US dollar, another good move because it's been in a really weak move. Selling pressure, look at that, selling pressure, selling pressure. It's very, very easy once you understand price and volume together to see the intent of where the market's going. Okay, so I want you to understand that and to apply that in your own trading so that you can do a lot better and be a lot more confident when you do take these trades and put them on. Absolutely will work for Forex. How do you know if it's buying or selling? The color. The color. Red color is selling, green color is buying, and white color is neutral. Neither buying or selling because they are basically evenly weighted. There's an even distribution of volume, and the price open and close is showing that the aggressiveness of buying and selling is very neutral. So there's really no demand being placed on this product at this price, either up or down. And it will work on range bars and tick bars. Absolutely. The only problem with the tick bars is that they're all even height. Range bars, the amount of volume that occurs on those are you've got an even amount on each bar, and so the tick count associated with those bars are very even. So you're not going to see the magnitude of volume. You will see the same color. You will be able to identify that. So looking over here at these charts, you can see that the height of each volume bar is going to be fixed, 934 ticks, for example. Each height will be 934 ticks high because that's the tick volume associated with that. But you can still see the clear delineation of either buying, selling, or neutral activity on those bars. So yes, it does work with any of these type of bars, absolutely. Even on Forex, if you're looking at the Forex market, then you can see very clear volume magnitude within those. If you're using Forex with tick, then you can see you've got the same tick count. So if you understand ticks in the application, then you can see that the volume is still important to use. And you can still see these types of volume signatures in the profiles, but you're not going to get the magnitude information. And Chris, yes, it works on MT4. I've already closed down my MT4 platform because I guess I had too many things open at once, but I can open that back up again if you need. If there is anyone here that's not using NinjaTrader, I can close my NinjaTrader down and open back up MetaTrader 4, and I'll be glad to show it. But it absolutely works on MetaTrader 4. Do you have a preference on time intervals for day trading, one short and one long time trading? I like and for intraday trading, I like 3, 6, and 12-minute time frame charts. That's what I have most of my setups and trades for, are on that, 3, 6, and 12. All right, nobody else on NinjaTrader? Okay, I'll go ahead and I'll start closing down NinjaTrader then. do that for you. And I'll get my MetaTrader 4 platform set back up again. RB wants to know if it works with Thinkorswim. No, it does not. We do not have any indicators on in Thinkorswim. You can use NinjaTrader platform to do your analysis using our tools, and you can trade your Thinkorswim platform through NinjaTrader, but we do not run native on Thinkorswim. Sorry. All right, here's the MT4 platform showing the Hawkeye volume. You're looking at the same green that indicates buyers, and I have the green volume painted on the price bar, and the white indicates neutral and red indicates sellers. And so you can see a very clear picture of either buying or selling coming into these markets. Excuse me. Okay. Absolutely. Longer, shorter term, it doesn't matter. Time frames is insignificant on this. Looking at the overall trends and directions, then integrating with the other platforms, absolutely. If you're looking at the software and if you're looking at how it trades, then when you see a specific setup, okay, when you see weakness in the volume at new highs, that's exactly what we've got right here. You've got double top, price failure, selling volume, see the red bar, neutral bar, low demand volume bar, see that? And this is clear indication that the market is weak and is going to start trending the opposite direction. So when you can see a continued trend and very responsive volume coming in at this point there, see that? When you got very responsive volume starting to come in, which is selling, selling, selling. And then you've got a very long range volume bar showing that the longer time frames are now coming into alignment. Then we see a clear signal here and a clear signal here that this is the entry point for the trade. Okay, that you've got aggressive sellers stepping into this market, making momentum and volume come in line on multiple time frames. This is a setup of my second time frame chart, and this is a setup of my third time frame chart. So these signals show me where the alignment occurs. Whenever I see these double dot alignments, then those are the points that I look at having the highest probability for trade entries. So when you see the alignment and entry point, then that's the point of where you start looking at your signal entries. You place your signal on, you have your specific set risk based upon your reward potential. So a 1 level of risk gives you a 1 to 3 level profit target, a 5 level profit target, a 7 level profit target, and so forth. So you're looking at average true range values that are determined to give you fixed risk reward settings. So all of these are based upon your inputs. So looking at these settings, then you're looking at the trading based on the values that you've input. And so this is the system, but I don't want to distract you from the topic we're talking about, because volume is the key. So if we were to pull those same pairs up, it was the Aussie, is that the Aussie yen that we were looking at there? Yeah, see, this is a 5-15-30. We were looking at it 15-30-60. It's easy to see based upon setups that what you're looking at and how you see it. You're looking at the trend, and if you don't have, the tools to use, let me put that back on again. Okay, then use your trend lines. Your trend line shows the overall corrective nature. When you see the weakness starting to come back in, you can see the pivot points forming on that. All right, so it helps you to draw these lines, and then when you get another break and then a correction, then you just move your pivot back down again. So you use simple trend lines to help you to put that. Then that tells you exactly where the correction is. When you see a break below, confirmed with volume in the direction, then that gives you a clear indication for entry on those points. And so when you're looking at those as entry points, then you can see that you're looking at 2 pips potential profit that's in a setup like that. Very, very low risk in these trades because you're only risking back to the amount of one average true range bar coming up into the initiation of that trade, which would be about one of these price bars. And then the profit targets would be 3, 5, or 7 average true range price bars. So you're always going to be right side up in the trades and not upside down. TradeStation, NinjaTrader, MetaTrader 4, eSignal, or multi-charts. Those are the 5 platforms that we do support. And it works in any market, whether it's Forex or futures or equities. And we've got quite a few options traders that use it based upon analysis of the underlying equity. So those are the tools that we use based upon that. There's no specific win rate you can apply because the strategy is open-ended. It's not closed-end system. And so the results are always going to be dependent on the trader. It is proprietary, individually traded, so we don't have any specific win rate attributed to the system itself because it's not a closed-end system. It's fully open-ended. That makes any sense. So I think I answered most of those questions. So let me pull back here then. Very quickly, I want to make an offer to you guys, and then I'll go right back into the presentation because I want to answer all your questions and show you more about how we can identify market direction using volume. Chris wants to know what the spots on the price. These yellow dots are isolated highs and isolated lows. What they are, they're true isolated highs or low in the market. So when you're looking at a isolated high or low, these small yellow dots, you can see that the high is greater than the previous and next high. The low is higher than the previous and next low. So that is an isolated high. They're important markers in the market, and we want to label them as such. They give us the ability to draw channels, congestion areas, and trend lines. So the yellow dots are pivots. Correct. They're very similar to a phantom, where you see this green bar right here. That is a phantom where the low is lower than the previous and next low, but the high is not lower than either the previous or next. So it doesn't obey the rules, so it becomes a phantom. It's equally as important, but not as well used. And so you can still use that in some cases, but for the majority of cases, it's always going to be a true pivot or a true isolated high or low that we base our analysis on. The Hawkeye starter package, the volume starter package I'm making available to you guys today includes all the indicators you see here on my screen today. The Hawkeye volume, the volume that shows you the actual volume, red, green, and white. It's not like a dumb volume that's just color-coded red or green based upon whether the close is greater than the open. That's how most volume is just red. It doesn't even show you, it just gives you a magnitude information. But with the analysis that we put in this, we put over 300 calculations per bar on this, and we make each one of these bars smart. So it's a color, but there's a lot behind it. So you get the Hawkeye volume. The volume radar are the three color dots you see here on price. This shows you very high yellow, ultra high red, or ultra low blue. So these identifies very important volume bars that you need to pay attention to. Okay, so these are the volume radar. Volume paint bar, that's the color of the volume bars that you see. These are normally just regular price bars, but each one of these price bars are colored with the volume. So it's very easy for you to see the interaction of price and volume together. Also, the pivot, the yellow dots that you see on the price, and the wide bar, that's the purple bar that you see here. The wide bars are also structurally very important to the market, and we paint those to help you to identify and know exactly how to trade wide bars. And there are strategies built around wide bars specifically that are high probability trade entry and exit procedures. And we teach all of this in our daily and weekly training sessions and in our on-demand libraries if you become a member of Hawkeye. So coming back to the presentation, I just wanted to very quickly give you an offer, and then I'll go right back to the questions and answers. So today I want to make sure you get access to all 5 of those indicators that we call our volume module or the volume starter package. The volume radar, volume paint bar, the pivots, and the wide bars. They all come together in a package. You get full access to our membership area. You get full access to all of our training webinars and training rooms, free. You get full access to the Hawkeye Inner Circle, which is our Skype daily chat, and you get a full 2-hour on-demand training course that shows you how to use Hawkeye volume with your current methodology in trading only. It's not sitting down showing you how to use Hawkeye, all the Hawkeye tools, the trend, the volume, the roadkill, the heat map, Fatman, all the other tools that we offer. It shows you only how to use the volume tool that you just purchased and how to apply it today in today's markets. We normally sell this for $360 every single day, but today, since you're in this webinar, we can do it for $97. It's a one-time fee. There's no subscription. There's no monthly cost. It's a lifetime license. So once you purchase this, you get to keep it for life. And if you purchase it for one platform and you want to change to a different one, then of course you can change it to a different platform as well. But you do need to have the supported platforms that it runs on, either NinjaTrader, TradeStation, MetaTrader 4, eSignal, or multi-charts. But it does not support Thinkorswim. It probably won't support Thinkorswim because Thinkorswim is an open software architecture, and so any software developed for Thinkorswim is open domain. So we have a lot of proprietary code in our software. And yes, it can be programmed and made into a strategy. So if you are smart enough, or if you have a programmer, then you can program the function calls for the software and include that in your automated trading strategies or your EA if you're a MetaTrader 4 user. It does not currently support Metastock, no. Absolutely, Chris, you could use those spots for diversification. Diversion, I don't know what diversion is, but absolutely, you look at for expansion and so forth, but use this link, www.hawkeyetraders.com/volume. It's in the chat room. Dan has posted that for you to click on, make it easy for you. But if you click on hawkeyetraders.com/volume, then it'll take you to a buy page. That way you can select the platform that you want and become a member today. So once you become a member, you have full access to all of this above, plus the training online videos and all of the on-demand membership area videos. Okay, so let me go back to demonstrations there. All right. So if you're looking at the color of the volume, I had a question about that, then you can see if I turn the volume paint bar off, you can see that the paint bars are normal. You can see that. And if you needed to use that with the candlesticks, you can see here's the normal candlestick setup, but if you apply the paint bar to that, then it's going to overlay the color of the bar with the color of the volume. So now you can see there are white. Have you ever seen a white candlestick before? Well, just want to make sure you see that this is now a candlestick that's been painted with volume. And now you can see the volume over the candlestick. So if you're a candle guy, it's going to really help you to understand this if you've got volume interlaced with that and applied with that, of course. We're asking about Tesla earlier. Tesla is an awesome stock, and I've been in Tesla for quite some time, as I have been with Apple and Micron. But looking at Tesla, we had our entry signals back about July of last year, where we saw a region of consolidation coming in. Then we saw a bunch of very aggressive buyers step into this play. So following the normal analysis that we were doing by connecting our dots, okay. Then when you see that break, and of course we trail that up, we see the break and it came right back down to support and then came right back up again. So once this started coming back up, I just simply pull my trend dots together, and this gives me a very conservative and high probability entry point that gives low risk and high probability of continuation of trade. So this also, if you were to turn the trend dots on in themselves, let me see if I've got those. Here it is. Then you can see right there, that's the confirmation that this signal did actually come in line, and this was where the actual trade commenced, because we broke the downtrend, we started a brand new uptrend, and then whether that point was in agreement with the longer time frames or not gave you a clear and cut entry points. And once that entry point is in, you can see you just take the trade and follow the trade based upon either the automatic trailing stop or the signal that is giving you, that's saying, hey, look, this directional trade is over, guys. Okay, so volume extension with opposing price extension with opposing volume is a very important key for understanding the direction of the market and the intent of where market wants to go. The same in Forex. You can see the exact same application in Forex markets. When you see the directional intent and the follow on, then it's very easy and clear to take the trade and to take it with a lot more confidence. Yes, Michael, I'll include the voice in with the indicator. That was good. Jose wants to know if it's compatible with MT5. Once MT5 becomes more supported, it will be directly compatible with MT5. At the moment, we're only supporting MT4. But it is fully compatible and can work with MT5. Chris, could you tell me what a diversion is? I do not know what that word means. If you can tell me what diversion is, then I'll be glad to answer that. What other markets you want me to look at? Or is there any specific stock or market that you would like some very quick analysis? I've got about 10 minutes left that I can look at for. CMG, be glad to. I eat at Chipotle's all the time. All right, look at this. You see this? Huge volume bar on brand new price extensions. And this is also a wide bar. This is telling you something about the weak nature of this. And when we saw this last time, we saw this when it was around 750 bucks. We saw a huge sell-off. Then we saw buyers starting to step back in again to correct that boat, but then all it did is this pushed it into a sideways, never-ending congestion zone of price moving sideways. And we saw the same thing on the monthly chart as well. But now we're starting to see a bunch of buying coming back in, but that buying on the weekly and on the daily is starting to come to a screeching halt. So watch out for a downward direction, because if we see this failure and if we see selling volume starting to come back in, this is a very clear sign that all the buyers that were here have already taken all the profit, and they're going to be looking at the changed directional intent of this market. I do not have the Hong Kong market, so I'm not able to pull up any of the Hong Kong exchange tools. Sorry about that. I only have standard Forex instruments as well, so I do not have access to the ZAR. Sorry. Goldman Sachs, I can definitely look at. All right, see this big extension of neutral volume, followed by a declining trend of selling volume, followed by responsive buying. Now we're into a congestion zone. We're back into a value area. Okay, you can see that same region right in here. This is a very comfortable value area for price right now. It's congested and it's waiting for price to determine what it wants to do. You can see when you start to see these pivots cluster in a specific region, then this tells you that you're looking for a direction in price. Right now it's not clear as to the direction because we're still on a downtrend. You can see that price came up to new highs, failed a second time, and then off it went. Now we're starting to see the same thing. We're on the opposite side. Started to come down. It failed. Came back down again. There's no buying. No selling right here. Big O neutral exhaustion bar followed by a bounce back into the same neutral range. So now this is being tested. Now we've got to see what it's going to do. The weekly chart is also showing that you've got a large amount of selling, but is not consistent. I would like to see a large increase in volume with a responsive decrease in price. We don't see that. You're not going to see this price continue to go down. So we're watching for this to break up, and once it does break this pivot here, then we can see that we're going to be supporting building and responsive buying. Is going to give you all the confidence in the world to take this trade and hold it, because once you see that break and then responsive buying coming back in with price, then you know that you're in a new trend and it's going to be a good trend. All right, here's the GLD. Okay, very easy to see what the intent of gold is right now. You've got a lot of weakness. You've got a lot of volume coming back in. You've got a lot of price responsiveness coming into that volume. Very, very nice hook pattern on price, trying to show weakness, a failed push, and then a very responsive selling pressure coming into this market. So right now, shorter term, we're definitely looking at any directional trades that are short in the gold market. You're going to be looking at taking those. Okay. Overall, right now on a weekly, we are in a weekly uptrend. We are in a daily uptrend that has just been broken. If you were to look at an overall trend, okay. So if you're looking at this, and you can see that we've broken our uptrend. We're now in a downtrend on our daily market, but we're still in an uptrend on our weekly. All right, and you can see that we're still in a very short uptrend on our monthly, although that uptrend is still in congestion. So once we got this break, it came right back down and is up. So we're now congested on a monthly uptrend. We're on a weekly uptrend, and we have just broken our daily uptrend. So now we are in a daily downtrend. Alex, yes, you can get the indicator for both MT4 and TradeStation, and it's still going to be a lot less than if you were to have bought just the indicator by itself. So absolutely go for it. But you will need to make 2 purchases, one for NinjaTrader and one for TradeStation. MetaTrader 4 and one for TradeStation, if you want to run them at the same time. All right, looking at the spider, you can see very same situation. You've got a attempted high with no buying. There's not a lot of strength of buyers in there. It's very neutral. A failed high, and then here's a third attempt. We can see clear buying, but it's not supported. See, the trend of volume is declining into a sideways price. So when you've got declining volume, you have a long range bar with very narrow volume, that's a very weak bar. So there's not a lot of strength in that. So we're looking for some weakness in the structure. We can see this clear accumulation distribution going on, more heavily weighted towards the sell side, but we are seeing a triple top form, and we've got to see that continued uptrend in volume in the monthly is going to be supported. Right now in the weekly, it's not. In the daily, it's possible, but right now it's not. And of course, NASDAQ has always been very strong. Okay. Here's the signal that we saw that we were looking at this market reversing and coming back down. And then we saw it came back down, but it never came back down with selling volume. It only came down on weak buying volume. And then when the sellers did decide to come in, they were anemic. Okay, look at this. A downtrend with an uptrend volume. See, okay, that's going to tell you something right there, that a failure to bring the market down followed by a very responsive buying market gives you a very clear indication that when this pivot high was broken, you're in this market to go long. It's just a clear indication when you see that. A failure in price is a great reversal signal. Volume helps you to see that. I'm just looking at the volume and understanding it. The other tools just make it easy. All right. When you apply the other tools to the market and you look at that, it's very clear. You see that the multiple time frames align. You see that the trend is active. You know where your risk is located. You know where your tools are applied. You know exactly where your profit targets are. It's easy to trade once you see the trend, but the volume is the key. And it's the one that tells you the direction you're going to trade, the confidence you're going to do on putting that trade on, and whether you're going to apply the tools and how you're going to apply them. Google. You want G-O-O-G? Okay. No, that's not alphabet. There's the one. All right. So what do you see here then? What's volume telling you on this? You see clearly that they've been very attractive. Okay, big gaps, big price gaps, earnings reports. Okay, right now you've got big gap up on neutral volume, but now you're seeing a declining volume on increasing price. That throws a little flag out for me that this is not sustainable for the short term. We can see an increased volume on a weekly trend, which is very sustainable, and we can see steady volume over increasing price on a monthly, which is sustainable. Markets will continue to go up on lower than average volume, but they will not go down unless it has higher than average volume. So this is a sustainable trend. The daily, I'm a little worried you might be able to see some corrections on this unless I start to see some stabilization of the volume or some average volume coming in at this point. But this is what I want to see, and I want to see that over periods of time. It'll come up, it'll correct, it'll come up, it'll correct. I want to see this same structure in the volume pattern as the price continues to stair-step up. So this looks like it's still continuing to go strong and long, and we probably will see some corrections in this, but for the time being, it's looking good. Which instruments have you had the highest success? It does not matter. I've had very high success day trading futures and on longer term position trading stocks and options. And we have a lot of people who are very successful trading in Forex. So it's not really dependent on the market, it's dependent on you as a trader, how successful you're going to be with that. It does work with binary options, so we have a couple of tools. Now the binary options itself might or might not have volume data, and the liquidity of a market is going to be heavily dependent on your application of volume. So if you're trading a very lightly traded market or has little to no liquidity, then volume really isn't going to help you. But we do have other tools like our Hawkeye Fat Boy, which is a tool that is ideally suited for trading in the binary options market, where you see divergence, you also can see overbought, oversold, and it gives you the ability to see directly correlation between markets, whether they're correlated or decorrelated, and the relationship between those markets. So it helps you to see that and helps to put you in the right position or the pair trade at the highest probability point, where you've got the greatest amount of offset or decorrelation. And that's the idea behind that. What if you do not understand how to use volume despite listening to the recording? Then we can actually help you. We have live question and answer sessions every single week where we can sit down and answer any questions that you might have that might help you to understand it better. So if you don't understand the volume or the relationship or the videos, then we'll be more than glad to go over it with you as many times as you need in order to understand it. Chris, this is what you were on about with the spots. The spots you're talking about, these little pivots. Yeah. Those are pivot highs or pivot lows. True isolated highs and lows in the market. Those do come with the software package, absolutely. As do the wide bar. Absolutely. The link again, it's over in the chat room, the little chat box over on GoToWebinar, over here on your right-hand side. The HawkeyeTraders.com/volume. I'll show that to you one quick time. There it is, HawkeyeTraders.com/volume. If you need to contact us at any time, you can contact me at team1@HawkeyeTraders.com or go to our website, HawkeyeTraders.com, for more information on this volume starter package or any other tools. But you need to use this link if you want to be able to get the special, because if you do not, otherwise it's going to be $360, which is this is a great deal to get going. There's no fees, no other subscriptions or anything else. You get all this information and full access to all of the membership site, including all of the on-demand training. It's not just a 2-hour video library. This is one specifically on volume, but there are others where we give you access to our 3-step entry-exit method. We give you access to our 6 ways the market moves teaching, which in and of itself is worth its price in gold. But we want to make sure that you have access to all the right tools and the teachings that will help you to become successful, to help you develop a trading plan that is consistently profitable over time. That's the goal. And we want to make sure that you can make that as well. This is a 5-part package, Mike, and it's not the complete package. It is complete in what we show you on the screen right here, where it gives you all the tools that you see. As far as a complete package, if you're looking at all the other tools like the Roadkill or the Fat Boy or the Kiss or these other tools, these are all part of other packages. But we're making this one package available to you at today's price, just to help support your teaching and instruction on volume itself. So that way I want to help you to understand the use of volume in the markets and applying it. We do have other packages available to allow you to do that, so absolutely. Our 3-step entry-exit method follows the standard package or higher. This price is good till the close of business tomorrow, and then the link goes away. So 24 hours basically. Are there any other questions or any other demonstration on a platform that you'd like me to show you? I've got about 5 more minutes today. We'll be moving over into the next presentation. Okay. Well, maybe this will be a chance, Dan, for us to get back on track and to come back in line with the original schedule. What do you think, buddy?
All right. Randy, thank you very much.
You're very welcome. Thank you. And let me put my contact information back up. There you go. All right. Thanks. I appreciate having the opportunity to come and present information about volume to your listeners, to those that are attending today. I appreciate it.